Yeah, everyone, we'll get started here in just a couple minutes. So you're telling me there's an echo? With the music? Yeah, so the music that is... Oh, okay. So wonder what the echo is. Let's try to figure this out, folks. It's a funny way to start a stream, but... All right, folks, let me know if there's an echo on this screen. I think it might have been that other screen. Welcome to the Kendall Report, where I share my 44 years of experience, help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. So, a crazy day. I will show you in a minute, but everybody thought that fact sheet that I put out last night on S&P with the 85% bearish tone was going to be wrong early this morning. Okay, yeah, it was that other screen, so I apologize for that. So anyway, we're going to go through all the charts tonight. I've got some other things I want to talk to you about. So let's go ahead and get into the video. So yeah, it's always fun to start off a live stream with all this kind of confusion. But anyway, welcome everyone. A lot to talk about. I've been discussing the last few days that you need to be very cautious. This is not a trader's market. You will get in big trouble really fast. And mainly because of some of the things that I will talk about here in a little bit. I've been discussing about the lack of liquidity. Now, I put out a tweet just a little bit ago, and what I was trying to say here is, let me just bring it up. You know, I was talking about we did 1.866 million contracts in the E-minis, and that sounds like a lot of trading, and it is, but the problem is the order book is very thin. It's the same as it is. I'm going to bring it up here in a minute. We'll take a look at it because this is a really important fact when you start to look at liquidity. And the reason why we're seeing this volatility is there's nobody stepping up on his bid ask. The old world used to be there were market makers, and now the market makers are algorithms that are being computer generated, and if there's nothing in the book, they don't stack the trades the same way. And I've seen this happen before. We went through it almost in every crisis. Now this could last literally 4 weeks, folks. We may see some stabilization and this illiquidity comes back. So since I'm on that, let's just start there tonight, and let's just talk about that. Let me bring it up on the other screen here. So I've got TradeStation up here. What I'm going to do here is zoom in on this so you can see this a little bit better. So, there we go. So what you're looking at, this is what I keep telling you about, is these numbers here in the stack. There's 2s and 1s and 5s. Even in the overnights session, these should be 20, 30s, and 40s on each side, where they're 1s and 5s, and you'll see it'll jump from 40, 75 to 42, so 200 points in just a couple clicks. And all it takes, like if I put a 100 lot order in here right now, it would run this thing probably to 45, 46. There might be somebody show up on the other side, but it would just cause this thing to move, 500 points. And back in, when we're looking at volatility, we had 300-point range today. So when I talk about liquidity, I look at the order book, and this is like this on Apple. It doesn't matter. Everything's thinned out from the standpoint of what we're used to seeing. So nothing's going to change from that standpoint from the standpoint of this volatility. And I keep telling everybody, be careful. I saw a couple comments in the live stream. I know a couple of those folks are on here that made a comment. Market's moving too fast for me. This is why. And until this stabilizes, we're not going to see anything. I always know the channel's coming back on. We're starting to get hundreds of new subscribers since I've been back on every day, and you always get the trolls. I call them the headline readers. So they read the headline of the video. They never actually watch the video, and then they comment. I love those guys because they have no idea what they're talking about. And one of the things that we'll go through tonight is what I started the dialogue last night in talking about how this broad trading range, it's going to be rip your face off. You might get lucky and grab some of these. I just watched 25 handle run, and it's almost back to the lows. I have my trading desk is over here. This is actually a remote view of TradeStation that I'm showing you on my Mac here. But the bottom line is, if you notice, just watch how this thing just jerks around and trades. Now, if you put a level 2 screen up on NASDAQ, it always looks like this. This is why I can't trade it. I have, believe it or not, I know that SPY is very liquid as well, and I just have no knack for trading that index at all. As liquid as it is, it's just not for me. It doesn't trade in patterns the way it is. Right now, it's impossible to trade. I won't even go in there. Even the pros are getting their asses whooped. When you see a 300-point range in a day, nobody's making any money there, folks. I know it looks like, did somebody make money? Yeah, somebody killed it, made some big money. But if you're trying to be too involved in there, they're just going to take your money. And I saw a couple of comments in Twitter that somebody goes, yeah, I was watching what you're saying about the bid ask. You're right. But this is where liquidity exists. Not through people. I could do a whole show just talking about how most people view volume an inappropriate way, in my opinion. And I've been watching it, and I've stood in trading pits, and I've seen volume, and I've seen sometimes it's effect and sometimes no effect. But we'll save this. I know I've went through these rants before, so my goal is for us just to kind of focus in, step back from these markets, and go on. So let's go back over here, and I've got a new background tonight. It feels like I'm not being cramped in on monitors. So let's talk about a couple things here. You know what? Trump's putting 104% tariff on China, and you know, I'm going to tell you. I'm going to tell you guys a story, and then it will all make sense. It's pretty quick. I went to a NASCAR race in Sonoma in California many years ago, and we were in this big gridlock trying to get a lot, and there was a big old guy sitting in a convertible, and some guy in a BMW cut him off and nosed him in. It's a gridlock. Nobody's going anywhere. And this guy got all pissed off. He got out of his car. This big old guy got a big cowboy buckle belt on. And he starts walking up to this guy at BMW, and the guy in the BMW says, "If you touch me, I'll own everything you own and your kids." He goes, "I don't own a damn thing, and you can have the kids." That BMW just started backing up. Okay, the reason why I tell you that story, that's Trump. He doesn't care. Because of that moment in time when I was watching that, I mean, everybody around, all of our windows were down, no air conditioning on because your car would have overheated. There was the amount of laughter in that area right there that everybody that saw that scene. But I coined this phrase, never, and everybody knows this, never mess with somebody that has nothing to lose. And I don't think Trump thinks he has anything to lose. Maybe he doesn't. And I don't think he's trying to destroy the country. I think I know what he's doing. But it's, my other famous line is, "You may love Jimmy Dean sausage, you do not want to see it made." And you're watching sausage be made right now. And Trump's going to stand up to these guys. He's not going to bend. And you can blame him. He's definitely triggered this whole thing. And just to go on this rant a little bit is, I'm convinced that what has to happen is for the last, not just 4 years, for maybe decades, we've watched just all this fraud and abuse and the padding of the books and cooking of the books. You know, how many companies have been sued for not telling the truth, and, everybody's trying to make the money work, right? And we're at a point right now, this is an opinion of mine, is that we're seeing that we're going to have to take a lot of this money out of the market. I made a snide little comment on a tweet the other day that maybe we got to go back to 2022 levels to get this out. And I don't know where this stuff goes. This is an economic war. We've never seen one of these before that I'm aware of. If somebody has, please point it out. But I mean, I don't know of in recent times of anything that's out there. And this is going to get really interesting. I'm watching this, the time and sales and the order book here. Our low that we printed on Sunday night when we got together was 48.32. We're at 49.32, 100 points away from that. It's going to be interesting to see if that number is going to hold or not. But let's just continue this dialogue. Trump's on a mission. What's interesting, I'm watching one by one. I saw Rand Paul talking earlier. Man, he's completely off the reservation. He must be getting so many calls in his office about tariffs and the stock market. It's got to be really ugly, because he's just sitting there and he's telling everybody, how tariffs work and how terrible they are and all this stuff. And I keep arguing, this is not about tariffs. This is about the fraud and abuse that we've seen. There's supposedly Doge has found something really big where they're going through the books. I don't know what it is. but it's supposedly a big element that's about to come out. So one of the things that I've talked about before, I know over the last week, is that what we're seeing is that the folks are seeing that all this fraud, they're seeing, and everything's in question right now. The market's integrity, all of that stuff. We're talking, we'll look at the treasuries. The treasuries are back at almost 430 again. Just like I told you, they're not going to go down, and the Fed's not going to pump. The Fed's not coming, okay? I don't think there's any reason for the Fed to come, because right now what we're seeing is that there's no signs, because we're looking in the rearview mirror. The last report we got from the economy was good, right? We got more jobs than we thought we were going to get. All the numbers coming out still looking good. We got some things coming out tomorrow that'll be interesting. And NVIDIA's going to like 84. I think I have a target on NVIDIA for 84. I don't know about 60s, but anything's possible when these things start to unwind. You're looking at a guy that was live trader in 1987 during the crash, 22.6% of drop in one day. And we had gotten short on Tuesday coming into Wednesday. We got real short in the markets coming into Friday. And Friday, going back to the 87 crash, Friday, every call option expired worthless on the OEX. And that was the big trading market at the time, was the S&P 100. And every call option expired worthless. Never happened before, never has happened since. So it was an interesting day. And then you came into Monday and you get this big, 508 drop on the Dow Jones. People used to still watch the Dow. I know some people do. I probably haven't watched the Dow Jones since the 80s. But what we saw there was just the complete collapse and capitulation. Not only did it was option expiration that Friday before the crash. So you had everything disappear. And if you didn't have your option trades on and all your spreads and stuff, it was almost impossible to do any business on that Friday. Typically, you would have been rolling over option spreads, all kinds of stuff. I used to work in an institutional desk, and you couldn't do anything that day because there was talk about liquidity. There was no liquidity, and it was open outcry. There was no digital trading then. So the reason why I tell you the story is that this liquidity thing, there's not too many, there's plenty of us around yet, but a lot of us that have not, if you have never been on a trading floor and see the look on everybody's face, we just see digital screens. We don't see the expressions. If you had a little camera on every trader's face and you could see all those faces like we used to in the trading pit, you can see the panic. You can see the despair and the lack of liquidity, everybody looking at each other like, what do we do? And that's still, I tell folks all the time that I still see that world. And the reason why I share all this stuff with you is this is what, when you get into these type of periods, it's brutal. Now, it turned out that 508 decline was actually the low of the move. So we went down from August 25th down to, I think August 25th down to October 19th. That was the low, and that was 32.6%. It wasn't a lot of days, and that pretty much ended. That was the bottom, and things started to work back. By the time we got, I think it was back to February or March. I've been meaning to validate that we were back to all-time new highs again. But the point of all of this illiquidity is, I'm really cautioning, there's no reason to get excited and try to find value in this market. Not at the moment. Think about it. Even if, look at what happened today. We traded up to over 5,300 and dropped all the way down into 49 handle. And it was just relentless, but it was relentless because of the numbers that I was just showing to you. I still have them on the screen. Is you're looking at these no liquidity in this market at all. So this is I keep emphasizing. So I just talked to somebody that watches the stream about an hour ago, and they were saying, I've been saying this over and over. I'm beating this thing down because this is really crazy. I saw somebody go, Bob, we're dying out here. Save us. It's okay not to have a position. I had the occasion. There's certain people I don't have a lot of respect for, like the Dave Ramsey, but there's another guy named Nick Murray, and Nick Murray was a buy and hold guy, and I came into a conference right after I launched my first dynamic portfolio manager back in, I think it was 1996, it was 96 or 97, and I was at a big conference, and I had to come up after this Nick Murray guy who was buy and hold, just cost average forever, and yeah, that's all you need to do. And I walked up on the stage, I go, everything that guy just told you is wrong. Here's how to do it. And I had just launched my portfolio manager, we call it WaveTech now, but it was VPM for years, Virtual Portfolio Manager. But all of the stuff that we have to do is to step to the side of the market. It's okay. I have met hundreds and hundreds of advisors that are the buy and hold pie chart guys. These guys are bleeding out right now. Okay. Our models have been in 40, 60+% cash for months. Okay. Not last week. We've been heavy in cash, so we've been protecting things. There is a way to step to the side when the railroad track, off the railroad track when the train's coming, so you don't get run over. And so, I'm trying to put something together. It will even be tomorrow or Thursday. Thursday let's do Thursday. I'm going to need some prep time. I'm going to do a show intraday on WaveTech. People are going to go crazy because they're going to want me to talk about the markets. Maybe I will but I'm going to try to avoid that. So there'll probably be 2 videos on Thursday, and yeah, I'm sure. DJ, I got to read this comment. There's none. Even advisors are contradicting themselves. Anyone with sounds like a plan, everyone on board. Okay, yeah, that's perfect. Yeah, and also right after that, GDP and stock performance are not the same thing. Yeah, the market is not the economy. And if you just read my Substack, if you don't get Substack, kendallreport.substack.com, it's $8. A lot of you have been signing up. I appreciate it. I've been talking for months about what's going to be going on, and our models have been so negative. There's no way to get a bunch of a rally here. So let me just look and see if there's anything else here. Yeah, so that is tough. It's really hard to bite the bullet and eat the losses. And just real quick, that's one of the things. That's why you should never try not to put yourself into those type of situations, because it is tough. Like, it's one of those things with Murphy. If you get out right now, then you know what's going to happen. The market's going to go straight up. Yeah, where's Tom Lee? That's exactly. I appreciate whoever, maybe it's you, put those videos out with Tom Lee. Listen, these markets are very, very difficult. I had an old buddy of mine used to always say it's never easy, and it's not. So I've had occasions where things are fairly easy, where the trends are pretty obvious. I think the trends have been pretty obvious for several months. We're just seeing that explanation point come in right now. So let's see here. We got about 25 minutes. Go on. I think the way these streams are going to go, I want to bring in a lot of perspective and talk about things like what we're doing right now. And what we'll do is the second half of the show, we'll just stick to the markets. And the good news is, I think what we'll start with tonight, I think the Waytech database, let me look on the other screen while see if I can get there. And hopefully the database is updated. It looks like it is. Let me click on a couple of buttons. I'll bring it up for you here. Yeah. Wow. All right, here we go. So this is the Waytech database. This software looks a little clunky, and it is just because it's very old. But the engine that runs this thing is solid as the day it was built. But here's where we're at: 10.16. So we have 1,495 open positions, 13,221 no positions. So, and we have no sectors, everything's flat, everything's out. This is a short-term database. And if I go over to the intermediate database, what you'll see here is there's one sector still long, which is utilities. Utilities is probably the only sector that even has a chance because there's still a energy shortage in this country, especially electric. But that's the last thing here, but we're down to 23%. And I suspect that what we're going to do is we will be down into the sub 20s. We're probably going to see the intermediate database go down. If that's the case, there's a rising probability that we're going to be able to maybe challenge that low of Sunday night, which it wasn't. Well, it was a trading low. It was on Sunday night. It wasn't like a primary market trading low. So same thing right now. We're pressing down to those levels in a very thin session, but they're all thin right now. We are a few ticks away from. See, I think I've got this up so I can bring it up for you. This is the order book right here, and we are just what 8 ticks away from making a new low on in this evening. And this is the other thing on this in this order book. You can see how many contracts traded at each price point, and like 200. I mean, this is usually thousands on a price. I don't even know if we can. There's one 1,026, but these are typically can be multiple thousands on a price. So if you're doing any kind of price concentration analysis, you're not going to get much here. They're not going to mean much. You can see these little green here is the amount of trades on a price. So back to the database, we're completely blown out. So this is going to take on the intermediate multiple weeks, multiple months to rebuild. On the daily, we're going to see probably rebuild, get up to 40, 50% bullish, back to 20, and we're just going to see it rotate out of here. I don't see us getting out of this particular scenario very easily. Now we've seen in the last, if you go to, let's talk the pandemic for a minute. If we go back to the pandemic, we had the Fed open up spreadsheet, add zeros, save, close spreadsheet, right? So they added trillions of dollars into the system. That's not coming this time, okay? This is not an event that the economy is shut down. The economy is not shut down. And what we are seeing is a lot of the air that was in the markets have been taken out, and it's not all out yet. And you can see how we're acting from that standpoint. Excuse me 1 second. I just want to adjust something over here. Yeah, so, we're not getting out of this. There's no Pasco collect $200 cards coming for a while. So let me just look at a couple comments. And yeah, so if Todd Stocks, I agree, and this is what Trump's trying to do. So I'm almost ready to name the era the rise of the blue collar worker. We have something unique. I'm going to go here. I'm not big on the illegal immigration, but a lot of people are in this country. They're not getting them out, folks. I mean, they're not going to round them all up. Tom Homan and gang are not going to get them. I'm all for get all the bad guys out. I was down in Phoenix going to a grocery store several weeks ago, and there was a no doubt big gang member, just the tats all over, and I conceal carry wherever I go, and I was just like, man, I'm glad I got this little equalizer with me. This guy was scary looking, and but the point is that if we get the bad guys out, we're going to have millions of people to work. There's robotics and all this. Everybody thinks the humans are going to be replaced. I don't think that's the case, but we're going to have the manufacturing concept. We've got a lot of potential workers. People came here legally and illegally for a better life. I believe that those people exist. I don't think everybody's criminals that came. I don't believe that. But there's going to be an opportunity if Trump pulls this off to rebuild the Rust Belt. I had convinced a good friend who's a documentary maker to make a documentary. I wanted to make one on Gary, Indiana. I grew up in that area. And I think there's going to be a big renaissance. I think I should put a hedge fund together and buy up streets after streets of real estate, because that stuff they're giving it away right now. And you could probably, you can literally buy, it's like Detroit, right? You can buy houses for lots for $2,000 and $3,000. There's nothing there, but just buy blocks of stuff up. I know that area well, and in fact, when I was in college, I worked at U.S. Steel, so I worked at the company there. But do a Google map and bring that up, and you'll see exactly what I'm talking about there. Bear with me 1 second here, just. So I am going to do this. So I have up here Gary, Indiana. All of this devastation that you see here, this is on Lake Michigan. I grew up just outside of this area here. Lake Michigan is a giant lake, 175 miles wide by 300 miles deep, and you can get to Atlantic Ocean, all that here. But I want you to see, this is what Trump is trying to do. This is Gary Works. This used to be all buildings. Now they've just gutted everything. There's a couple operational things here, but for the most part, this is the canal that come in for shipping. This place has been gutted. This is the only parts of the steel mill that's still there, which is the old plate mill. I used to work right in the next building over from this. And also, if you go in, there's railroad tracks, all the infrastructure through the Rust Belt, everything's there to completely rebuild this whole Rust Belt. And I'm telling you, if I'm going to zoom out a little bit more, if you come out into the streets, there's areas where these houses are just gutted. There's nothing. So, and if you know anything about the old days, there was a time when Gary, Indiana was one of the big boom towns of the country. It was the model town. It had everything that you would want to have. I think they're going to rebuild this. It's going to be cheap. The infrastructure's there, railroad tracks, major waterways and ports, all kinds of stuff. I could go through the whole thing. I did a fair amount of work for that. Yeah, so it's not going to be 20 years. Tesla built the largest auto plant in 3 years. So don't think it takes 20 years like it used to. It's not going to take that. And not only that, there's a lot of infrastructure that's ready to be just moved into. So anyway, I'm sorry to get on that rant. Let's get into the markets. This chart is up there, so I'm just going to start with this. What did Trump tell you? He's going to get oil prices down. Look at this. The other thing that's happening simultaneously, this is crude oil. And look like maybe we're going to stabilize over here at around the $60 mark. We've just continued to go through there. Does look, these are peak values that you can see from just looking. I'm going to bring this zoom out a little bit. Just looking at this first indicators, all the indicators were down at extremes here. And these aren't zero. These aren't like our RSI. So one of the reasons why I use the indicators that I use is I don't like indicators like stochastics and RSI that go to a 0 or 100, basically, right? They have limitations, and they get up and they get pinned at the top or at the bottom, especially stochastics. It's very difficult. So I wanted, when I was in my early days of trading back in the 80s, I wanted something that would always give me and reflect what momentum is currently, and then trying to anticipate when that downward momentum is going to change. Well, now, a few years back, we added the machine learning, and this has given us the ability to predict somewhat of the future, looking out what the indicators are going to do, and we can anticipate the momentum even dissipating or accelerating, whatever it might be. And this has been a big innovation for me personally, because what I was doing in my mind after watching these things for literally decades was trying to extrapolate out what was likely going to happen. I remember if you went back even 5 years ago and looked at some of my streams, I would talk about where the PPMs were and the momentum and what my expectation of it is. Now we have at least a mathematical representation of what might be. And the same thing with these moving averages and things that are here. This is where moving averages are being projected. And it's interesting. This is daily crude oil. The projection for this 10-period moving average is vertically down. And what I was trying to show you is we are about as extreme as we get on these things. And so we're seeing the momentum at peak levels everywhere. And what happens, I always do this half pipe. If you look at a half pipe, if you put a ball in a half pipe, it rolls almost to the top of the other side and it dissipates over time. And the way I see momentum is it gets to peak, it slows down, and then if there's another surge in a trend direction, you get a reset of that momentum, then it has to bleed off. So there's a lagging effect of the bleeding of momentum. Sometimes we get V bottoms. Those are pretty special if you figure it out ahead of time, which we have a couple of techniques that we can do that. But most of the time, you get these rallies and rejection. Today would be a good example of that. And what I was talking about, we might get up to the 10-period moving average, and we didn't even, we didn't get close to that. So there's still some things that are out there that are likely. So let's go. We've already looked at the database. Let's go to, we're going to do S&P, NASDAQ. I'll just kind of roll through, and we got about 20 minutes to the end of this stream. So I appreciate everybody hanging out and listening to the old man talk. All right. So let me bring up, I mean, this is a crazy looking chart here. So once we got, this was Wednesday, March 26th, and then we just went into the vertical drop. And, you know, you've got kind of a B, C, or a 1, 2 going here. And this, I mean, this is just devastating. But what I want you to look at is look at what's going on with these moving averages. The forecast, the dotted lines are the forecast of where the averages are going. Now, as we get price movement, we'll start to see it go on. But we also have 3 Fibonacci targets that are still live. 49.26, we're trading right at that value right now, and 47.73, the low print the other night was 48.32. So that number doesn't really mean anything other than it looks like the projection is that we're going to come down. The red dot indicator, let me just bring this up so you can see, but this red dot is forecasting a few days of a dip and then a rally back up. Ultimately, we get the challenge as 10-period moving average, and if it's down this kind of angle, we're going to get a rejection and probably a retest of the lows. So this is a pretty drastic forecast. This looks like what I've seen intraday charts, like a 5-minute chart look like, but this is a daily. So I'm going to go from daily to weekly here. And the weekly chart is even more vertical. We're almost down to the 200-week moving average right now. Let me get that number for you. That number is 46.92. Okay, so there's still some potential here on the downside. And let's embrace what I talked to you about earlier. What if we went back? What if we did go back to the 22 lows, as I suggested in my little snarky tweet that I made? That would put us back to 3,400. If we went it back in this range, 42 to 3,400, that's not even far-fetched anymore. That's almost expected. So basically, this whole last rally, when will this be? This is October. Think about what happened in September. The Fed lowered rates by 50 basis points. For what reason? For the election. I still will argue that that was one of the most political moves that a Federal Reserve has ever made. Prior to that moment, I had given Jay Powell an A+ on managing everything that he had to deal with coming out of the pandemic, the QT, managing interest rates, all of that, A+ until that moment. And that was, there was no reason to drop those yields at that time, especially 50 basis points. I still believe, and I don't think maybe it'll equate and people will go see. I told you, Bob, that this was going to happen. But what I'm saying is I think that there is going to be another 0.5 point decrease in yields on the front end, but I don't think the back end or the 10-year plus, probably start at the 7, but we'll go to the 10-year plus, is not going to move much. It's going to stay 395, 4.25, maybe 440. It's not going to go down. And those back-end yields are going to stay where they are. And so we'll talk about, I don't think we'll go to Lee, I don't think we're going to go to the COVID lows, but I think this is a pretty decent base that was built in 22. But think about this, that would be a crazy number because we had 23, 24, we had a 52.5% compounded rate of return basis, the S&P that we're looking at here. Now all of a sudden you're taking all of that back. If you think about it, what was going on then? And this is not political. This is what was going on. 800,000 plus job revision on the annual review. The previous year, I think, was 200. So over 1 million jobs had been reported to us, investors, market participants, thinking that, wow, these job numbers are amazing. Meanwhile, they got millions of people coming across the southern border and using those bodies to pad a lot of numbers. So what we witnessed was probably one of the biggest fraud ever by government agencies. I know this ought to get some of them going out there, but this is one of the biggest frauds. They cooked the books to make the market look good. And we bought in it. We made money, made some good money during those periods of time. So I'm not going to argue it, but the markets responded to these fictitious numbers that we are going. And I still think the BLS, all of these agencies, I still think most of their numbers is bogus. Those of you reading my Substack, in the last year, especially after that revision, I've been saying, what do we trust anymore? We're trying to find things that we're going to trust. I kind of lost a little bit of that vision, but I'm back on it now that we know virtually everything we see is Memorex, otherwise not real. And I don't know when we're going to get to realities of where we can look at these government numbers and actually feel like we have confidence. So this is the biggest element that is happening right now, is we're getting this lack of confidence in the markets. I mean, we're all feeling it. I'm just saying it out loud. I'm saying the quiet part out loud here, is that all the books have been cooked. We got to take all that out. Part of the good and bad of the Doge situation is I don't think they thought about that the backdrop of this might be that there would be a loss in confidence in the markets, and that would be displayed in market sentiment. And I believe that's what we're seeing here right now, is a lot of lack of confidence. Like, it's a Jerry Maguire moment, like, show me the money, because I don't see it anymore. And this is what I think market sentiment is. Very dangerous environment. I think, and I told you before, if we see yields start to spike, then that tells you confidence has been lost. Trump's putting 104% tariffs tonight on China. Does China start selling their securities? Japan's not going to sell them because they got to have them because of the structure of the Japanese economy. But China, are they going to sell their treasuries? And if they do, I'm trying to remember this old movie. Chris, somebody help me out here. Somebody that's been around for a while. Chris Christopherson. It was Jane Fonda, and I'm trying to remember this movie, but there was a final scene. It's sort of like the Margin Call movie, only old school. I'll have to look this up because there's some great scenes in there. And they're in a big trading room, and the main trader's telling everybody to buy gold. And because the whole financial system, it was basically what I'm talking about, where you had a major player in the bond market goes and sells. So the bond vigilantes, as they've been coined, they come out and they sell, and the whole thing comes apart. I don't think we're there yet, but watch the treasuries for signs of lack of confidence. The other day when the market was going down, they were bidding, they were buying treasuries. So they were looking for somewhere to run to. Well, all that came out already, and we printed back up. So while I've got this chart up, let's just go. Let's just go to the treasuries real quick here, and bring this point across. So here you can see treasuries right back into their. Let's see what the range was. We're looking at range. This is a weekly chart. We're looking at range 397 to 428. Last trade 426. So we went down, ripped right back into the area. I saw a guy on I think it was CNBC maybe, but he was talking about the last week when the bonds are down. he said the 10-year is going to go to 3.20 and Fed funds are going to 2%. I don't think that's what's going to happen here. I did cover the yield curve a little bit, but it just kind of jumping around a little bit. Yeah, micro strategies. That's going to be that'll be a whole show one day, I suspect. Yeah, that's really interesting. Earl Cruiser GT during the GFC, Australia was short-term lease to the U.S. Yeah, that was one of my most famous moments, I think. Yeah, rollover. Thank you, Jason. Thank you. I got to write that down. I got to look that up because there's some great scenes in rollover. (1981). That was an interesting time because that was when 1981 was when interest rates were 25%. Can the gold standard come back? I don't know. Did they ever? I've asked this before, and I need to research this. Did they ever go to Fort Knox and see if the gold was there? They were talking a big game. Yeah. So is the Nikkei tanking? Is that true? Somebody? I'm just looking through some comments here. Yeah, I just got to look at something. Yeah, I see Dr. Baker's on with us. Hey, price of UST bonds has declined for more than 6 points in the past 2 days. Exactly. But listen, you got to watch. This is all you got to watch. I saw this Dave Ramsey guy. I'm trying to be nice. I just don't have any respect for the guy. He's been, making a lot of money on his little shows and his stuff, and who knows what the guy really does. But I saw this smirk on his face on an interview about 2 hours ago, and I thought, man, anyway, I'm going to keep it clean here. But yeah, so that's exactly right. Now, I said we were going to do the Dow last night, and I'm at 852, and I'm kind of mad scientist mode at the moment. So let's take a look going from treasuries. Let's go to DXY. I meant to look at this last night, and this is actually an interesting chart, and I'm going to keep it without indicators for the moment. I think there's a possibility that we're trying to take out the 200. This is a weekly chart, 200 week. We do have some fib targets down here at even. If this thing rolls over, then the two things we need to watch for is the Dow collapse and this coinciding with the selling of U.S. Treasuries. That, I don't care about equity prices, none of that stuff matters. You're looking at $36 trillion worth of debt, and I've been trying to get this statement out, folks, so appreciate everybody watching to me going into mad scientist mode. But one of the things, if we start to see the spike in the selling of that, I do not believe Doge, the administration, actually were paying attention, because they created the lack of confidence in the system by exposing the fraud and stuff out there. Now I'm going to get all kinds of comments on the channel. They've never found any fraud or anything. Are you kidding me? I mean, unbelievable. So I can tell you I've had conversations. I actually had those of us older people that were been around, but there was a collapse of a municipality in Southern California. I was working on an institutional bond desk at the time, and was actual privy to some of the stuff going on there. and they had absolute amateurs structuring the municipality. I won't. I'm trying to. It was Costa Mesa, but I'm trying to remember the municipality, and they just blew that whole place up. Okay, and you've got amateurs everywhere, more so than ever, that are running a lot of these municipalities. We've seen the lack of, I don't know, I'm trying to find the right words, but the lack of abilities in a lot of the people around these governments. The lower you go down in government, you get to state, you get down to the city level, it's about as fraudulent and as inept as anything there's ever been. So we're working on the foundation of the municipalities. I can tell you, I live in a fairly small community here in Arizona. Like this whole area, I think there's 55,000 people in this city. If you could see what they are destroying this area. They had the most amazing opportunity, but it's because of the types of people that run for office and the people that are in office. And we get an ex-police chief as the mayor. Okay, he's well known in the community, but he has no clue what he's doing, and it's pretty obvious. And people are getting pretty upset about it. But this is everywhere. Okay, so if we see long back to the point, if we see the serious deterioration above 460 on the 10-year, maybe if it spikes, then that confidence is gone. I'm hoping we don't see that. Okay, that's not what I want to see. Yeah, yeah. Asian, hey buddy, you're back. So, yeah, that's part of it. Create a crisis, induce this solution, which people, and that's maybe exactly what Trump's doing right now, because I've said this before. You got to break it to fix it, and they're definitely breaking it. But yeah, so DXY. I'm telling you, watch these elements. I don't care about equities. You shouldn't even be in equities. But if you are, then you're going to have to deal with a lot more pain. But from a macro standpoint, we need to watch the bond market, nothing else. That's where all the money's at. And so if that starts to blow up, then we know we got some serious issues. It's Katie bar the door. Okay, so, okay, let's see. I'm right at 1 hour. Yeah, thanks for the rollover. I'm going to have to, I might even have to pay to rent that one. I want to see it so bad. It's funny, one of my favorite GFC movies was Margin Call. It's one of my very favorites. And there's some great lines in that one as well. And I put out on Twitter and Moneyball, there was some great lines as well about when people get challenged. We're seeing the system being challenged right now by, we can see all the domestic violence and all the craziness around Tesla, and we can see everything that's going on. And it's not pretty, and society can get pretty messy. There's no doubt. So, but this is going to be my metric. Watch the bond market, watch the dollar. If we start to see too much start to deteriorate there, then we've got an issue. Yeah, so it's interesting. Joshua is saying privatized pensions undermine freedom. That is the biggest BS statement anyone's ever said on this channel. Because if we would have privatized, when George Bush wanted to privatize Social Security, if he would have done that, nobody that ever retired in this country from this point forward would ever have to worry about Social Security. It would be so liquid if they had done that. I'm a big proponent of the opposite of that. All capital letters on the opposite of what Joshua just said. I think hopefully I didn't misinterpret what you're saying. So let's see here. Yeah. So I'm just reading a couple of comments and we're going to close out here. Yeah. I argue somebody's talking about if we rally to 22 and then rally back to today's level, it would be a head and shoulders. I always tell everybody, I've only seen, in 40 years, I've only seen two legitimate head and shoulders patterns. Those are amateurs only for that stuff. I'm in the process of writing a book right now. It's 15 chapters. I'm on chapter 4. Just went through Edwards and McGee and how wrong all of those triangles and shoulders and all that stuff really is. It's so misinterpreted. And there's so much bad analysis out there on YouTube and on especially Elliott Wave, but a lot of old Edwards and McGee stuff. You know, there's bad Elliott out there, everything. It's pretty bad stuff. Yeah, so last year, crypto, I did say those things. This year, the markets are constantly evolving. If you go back in my Substack, you'll see in the last couple of months, I've been talking about the potential for, I think it's more than a potential, but Q3, Q4 this year, I'm looking at negative numbers for the economy. And, you know, maybe that's the other way to get rid of the inflation, right? Just crush everything and then bring it back. You know, maybe a much slower bring back than what happened in COVID. COVID was ridiculous at what they did, right? That they turned off the keys. They let the car almost get to the point where it wouldn't restart. They turned it back on, and then they cranked all the money in there. All right. Hey, so this Asian guy, one of the rules here on this channel is you don't promote other folks. Smurf, Pamela, just ban him. Okay. I put up with him last time. I don't want him around. Yeah, just ban him. I don't have the ability. Just block him from the channel. I'll do that later. Anyway, so have a good one. Yeah. So, yeah. Yeah. Don't put the Discord out here. Oh boy, Pamela. No. That's a private Discord only for folks that bought the indicators. Oh man. Yeah. Okay. We're getting out of control here. Okay, folks, we're going to end. I appreciate everybody coming today. And it's, yeah, that's funny. Tom Lee apologized. So, yeah, well, help me somewhere else. Okay. That's all I got to say. Oh, okay. All right. No problem. I don't want that out there if somebody has that link. Yeah, listen, folks, I appreciate it. You know, we're making a big comeback. I had a meeting today with some folks. We're going to be doing a lot of promotions. I'm going to make a big comeback here. Probably Thursday, we're looking at intraday, doing 2 videos on Thursday. One will be on portfolio management, only on portfolio management, depending. If the markets are too crazy, I'll have to consider what I'll do that day. But I do want to do it during the day and have a live stream and have some interaction. All right, thanks. But yeah, listen, folks, appreciate it at all. Yeah, it's just I always know things are good when we get these folks that want to come up here and promote themselves. The rules of the channel is you can talk about anything, just don't promote other YouTube channels or any of that stuff. It's just not appropriate. You know, I work hard. doing stuff. I'll be up till 3 in the morning tonight writing the newsletter. So get the newsletter, get all the stuff that I have. And in the description when we get done here, I will give you the links to get to the product. So hopefully tomorrow we'll see you again, okay? And then we'll see on Thursday, there'll probably be 2 videos, one during market hours and then one during the usual time, which will end for the week. And if markets are crazy, I'll come in Friday as well, okay? So, yeah, hit the like button, subscribe, all that stuff. We'll go from there. Okay, folks, have a great rest of your evening, and we'll talk to you tomorrow. Hey, the newsletter's $8 a month. For a year, it's $6.50 a month. Thanks, Bo. Appreciate it. Thanks, Pam. Pamela. Yeah, I'm curious, is that echo on my voice back? Yeah, you can beat cost averaging easily by stepping to the side. It's called advance and protect. Much more effective. Listen, anybody that promotes a channel, you break the rules, you get banned. Maybe if that guy's around, he could send me an email explaining why two strings in a row he's been disrupted. Maybe if he sends an email, he'll give his money back. Yeah, sorry for the echo, but yeah, the Tesla gig was built in 2 years, so hang on. We got good stuff ahead. Yeah, I'll figure out what's going on with this screen. Not sure what happened.